they're going to do. They're going to fix the tax code. They're going to decide who pays and some other stuff. And so they'll kick the can down the road, meanwhile ignoring the real issues.
That would be bad news for Wall Street, wouldn't it? Because investors are always wanting some kind of certainty. There's not much, I know, in this game, but they want to see what the tax code's going to be, off into the distance before they start investing, right?
Yeah, the market does not like when there isn't a particular position in place. It doesn't like indecision. It's not happy right now. It went through some really key support levels on the Dow. We went through 13,000 and couldn't get back to 12.9 in the last 2 days. It tried to rally, closed at 12,756 today, only down 56, but you're going to see 300 and 400 point drops. We're going to go down to 12,000, and we could retest. It's a great reason to sell, take profits. We could see 11,231, which is the December 2011 low.
Doctor, they're not going to let this happen. I
They
mean,
don't have a choice in the stock market.
But you guys are smart guys, and the politicians, we could argue if they are or not, but they can look and say, for our economy to truly recover, right, we're going to need a plan that's long term. You can't have this debate continue on a whole nother year, can we?
Apparently we were gonna. Do you really think that they can actually resolve these issues before the first of the year?
No.
I mean, they're arguing about it today. One says they're, no matter what, if we don't raise taxes on wealthy people, we're going to veto the bill. So what bothers me more than anything is that this has become in the media. It's become the issue, and if we can only get by this issue, then there'll be clear sailing. I'm here to tell you there won't be clear sailing because incomes are still going down and jobs are really hard to find, and businesses aren't creating jobs, and they're not creating jobs because of the uncertainty that the government brings, as John said, and because of all of the burden that full-time employment puts onto a company that the government has loaded onto companies. And until they recognize that problem and start to fix it, we're not going to have an economy that can actually grow to its potential. Oh, we can have some 1 or 2% growth, but we'll have more trying times, 1% growth and then maybe a slight recession and then maybe 1% growth. And we will end up looking very much like what Europe has looked like for the last 20 years, which is almost no growth, and then finally what they're going through now, disaster.
Bankruptcy. The fiscal cliff. Before there was talk of the fiscal cliff, yes, the deadline was there. It was looming. There wasn't a lot of talk about it before the election. Right. Wall Street was above, what were we at, above 13,000? Is that what we were trading?
13,663, yeah.
So it was looking pretty good. So someone out there, your normal Joe, who maybe it doesn't even have anything in the stock market right now, is saying, look, when the stock market was doing great, it didn't help me. The economy didn't seem to be getting better for Main Street. Right. Where is the disconnect, and why is there such a disconnect?
It's funny, the situation on Wall Street is a second-by-second one. If you had CNBC on today and you were watching Goldman Sachs, the thing went from 115.08 to 118.85 today. I mean, that's a pretty good sized move for a stock like that. And it was just second by second with CNBC, like, are we going to solve this today? Are we going to solve this tomorrow? Are we going to solve this in 2 weeks? Are we going to solve this at the end of the year? And Wall Street is a mechanism where it doesn't want to go nowhere. So as long as it goes up and down, they're happy, and people make money and lose money. But the long-term outlook is not good. And I think the biggest problem that we haven't talked about is, doctor says pushing it off to 2014. The biggest thing with this is if Romney would have won and you could have also gotten the Senate with the Republicans, then everything would go their way. Or if the Democrats could get back the House, that's the biggest problem to get this solved. We're in gridlock. I think he'd agree with me there.
Of course we are. But the reason why the stock market goes up and the average Joe doesn't feel it is because there is a big disconnect now between
Huge
the financial
disconnect.
sector and Main Street. And it starts with the fact that the Fed's balance sheet has exploded, and that has exploded onto the balance sheets of the banks, all these excess reserves. But the government is now telling the banks, you have to have more capital. So isn't this crazy? In a time where we want them to lend, we're telling them not to lend because they need more capital?
Well, that's interesting because the Obama administration has said the banks just aren't lending, and it has nothing to do with them. It's just that the banks aren't doing it. And we heard this from a lot of people, especially before the election, before everybody knows what exactly is going to happen. And now the argument is we're waiting for this fiscal cliff, an agreement from Congress, and there is money there. It's just it's cash strapped right now. But you're saying no, it's because the government's asking banks to hold on to more capital.
Right. Little banks can't lend because they don't have capital and they cannot access the capital markets. And besides that, they're not run by their managements, they're run by their regulators. Little banks are out. The big banks that have the cash never did lend to Joe Public. They always lent money to an intermediary who lent to Joe Public. The intermediaries all disappeared in '09. So the big banks don't know how to lend to the little guy, okay? And they have now new capital requirements coming down on them between now and 2019 that will significantly require them to have more capital. They can do that in one of two ways. They can access the capital markets and dilute their shareholders and pay for it by having the shareholders vote them out of office, or they cannot make loans and have their reserves build up by profits. So their capital, if they don't make loans, their assets stay the same, their capital ratios go up. That's what's happening, and that's why we have this disconnect between the financial sector and Main Street.
Would some say, and I've heard this already, these are the ramifications of electing President Obama, a president who wants to, raise taxes on, and you can argue rich or not, that word there, but on people making more than $250,000 a year. The majority of those people are playing and trading and involved in the stock market, so they're concerned that they might see a tax hike, they're pulling back, they're selling off. Is that what's going on in Wall Street?
Yeah, and I mean, Apple is the stock that pretty much, you'd have to be under a rock if you look at the market and not look at Apple. I mean, the Dow would be at 15,000 if it included Apple 2 months ago. It's gone from 700 at the end of the third quarter when you opened up your 401k, if your investments, if your advisor was in those for you or your 401k. It hit 526. It's not done dropping yet. That's what happens.
You say, Doctor, that employees do not like Obamacare. It throws more costs on them. Employers, thank you. But you're saying that the medical stocks, you were telling me, have actually gone up.
Oh, yeah. As soon as, that was an excuse. But yeah, HCA, TYS, those are both big healthcare providers. They both went up. And another thing that we can't forget is real estate is up 10%, even in this area.
Does that continue?
I think so. I think that continues.
What do you think, Doctor?
We have AB 284, which has artificially held down the supply, and I think that's why prices have gone up.
The robo-signing,
Yeah.
not allowing lenders to just process paperwork.
Once that comes off, I think we'll either have a lull or maybe a slight downtick. But I think John is right. The bottom has been put in.
So the market's still a good time to buy a home?
Oh, yes, I think so.
The next
It
year or two?
depends on what you want to do with it. Don't buy it for an investment. Buy it if you want to live in it.
Yeah. All right, great stuff here. We've got 2 minutes left here. So let me ask you, you're telling me, and these are the numbers here. The nation's added about 171,000 positions. That was in October. I think 30-something months now we've added jobs, 38 months, something like that. Don't look at that, is what you're telling the American people out there. Don't look at those numbers. Because they don't tell the full story.
The way the numbers are calculated are very misleading. We have all kinds of biases in the headline unemployment rate of 7.9. If you're not employed, but you babysat last month, you're counted as fully employed because you babysat.
So if I work a couple hours.
Part-timers are counted as full-timers. If you've been unemployed for more than 52 weeks, even though you're still collecting unemployment for 99 weeks, if you're unemployed for more than 52 weeks, you're dropped as if you don't exist. The numbers are very poorly done. A better number is the U6 number that the government publishes. That's 14.6% unemployment. Still has biases. When you take all the
That's
biases,
the unadjusted.
that's the U6. That's the one that actually counts the part-time employee or employees as part-time.
Okay.
If you take the biases out of the U6, the unemployment rate is approaching 23%.
Wow. Dr. Robert Barone, local economist with Universal Value Advisors, and John Luers, a Wall Street analyst, a former Wall Street analyst. Great insight by both of you guys. We'll definitely have you back here on Face the State. I appreciate it. And I'm Chris Ciarlo. Thank you for being with us here on Channel 2 for Face the State. Next week, we're going to talk about charity and how people in need your help this time of year. Bye-bye.